has more than 1,000 techno-commercial staff supported by a strong sales and marketing team to promote and develop new products. It was due to the efforts of this team that Dhanuka was able to secure higher growth in its focused products in comparison to the generic products, which helped us to protect the bottom line in a challenging year. Dhanuka's strong R&D division has world-class NABL accredited laboratory as well as an excellent team for new product registration and development. Dhanuka has international collaboration with 10 leading global agrochemical companies from the US, Japan and Europe, which helps us to introduce the latest technology in India. Recently, Dhanuka has established a modern R&D facility with a research farm in Palwal, Haryana for faster development and commercialization of new products. The rainfall was erratic both in Kharif and Rabi season. The pest infestation was also low, due to which many sprays were missed out by the farmers. This has impacted the growth plans of the industry as well as the company. In the first half of the financial year, the prices of raw materials were on an increasing trend. But in the second half of the financial year, the prices were on a reducing trend on a monthly basis, due to which the company has incurred losses on high-cost inventory. This has impacted the gross margin and EBITDA margin of the company. Now moving on to the financial performance, our revenue from operations during Q4 FY22-23 is rupees 371.23 crores, representing an increase of 16.63% over the corresponding period last year. And for the financial year 22-23, it is rupees 1700.22 crores, which is 15.05% up over the last year. So first time Dhanuka has touched the mark of 1700 crore top line. EBITDA stood at rupees 77.88 crores in Q4 of FY22-23, up 19.67% year-on-year basis, and for the financial year 22-23, it is rupees 278.69 crores, up 5.82% over last year. Profit after tax is at rupees 65.31 crores in Q4 of FY22-23, up 20.28% compared to the corresponding previous quarter, and it is rupees 233.51 crores in FY22-23, up 11.85% year-on-year basis. First time Dhanuka has touched the earning per share more than rupees 50 per equity share. The zone-wise percentage share of turnover for Q4 FY22-23 was North India 29%, East India 11%, West India 19%, and highest share was from South India 41%. Product category-wise share of turnover for Q4 of FY22-23 was insecticides 46%, fungicides 17%, herbicides 27%, and others 10%. The company has already rewarded its equity shareholders as it bought back 10 lakh equity shares at the rate of rupees 850 per equity share, absorbing rupees 85 crores. The board of directors has recommended 100% final dividend, that is rupees 2 per equity share, having a face value of rupees 2 per equity share. The final dividend will be subject to the approval of the shareholders in their 38th annual general meeting scheduled to be held on 2nd August 2023. We are happy to inform you that the company has launched the following new products. Number one, Implode 29.73% SC, which is a maize herbicide. Mesotrex 24.97% SP, which is also a herbicide for maize and sugarcane. Apart from this, the company has introduced the 3 biological products. One is Downhill 2% AF for controlling downy mildew. Speronil 2% AF for controlling of wilt and rot. And Vitex 1% WP for controlling of white grub, termites and borers. We are happy to inform you that the company has received patent registration for its product soluble granular insecticidal composition, Cartup, with brand name Mortar. Our technical plant project at Dahej is progressing well, and we are expecting the production to start in 3rd week of July. Initially, we will start with the production of bifenthrin technical. Recently, we have received important government approval for operating a factory, that is factory license, PESO license, which is issued by Petroleum and Explosive Safety Organization, as well as power connection approval. The new plant will support Dhanuka in our long-term business objectives and revenue growth. We consider ourselves responsible towards securing the farmers' welfare and preserving food security of the nation. We continue to strengthen our association with the farmer producer organization, that is FPOs, Krishi Vigyan Kendras, that is KVKs, and other critical institutions to increase our business expertise and boost our market presence. Thank you very much for your kind attention. We will now take the questions from you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prashant Biyani from Elara Securities. Please go ahead.
Yeah, thanks for the opportunity. My question is for Mr. Rahul Dhanuka. Sir, in this scenario where other companies have struggled to clock margin accretive growth, what went right for you this quarter?
Well, we really strengthened our relationship with the channel in the previous quarter, and our team took it to the next level in terms of leveraging our channel reach, primary as well as secondary.
Okay. And sir, so for secondary sales, would you mean that even the liquidation was strong for us?
Come again?
By secondary sales, would you mean that even the liquidation was strong in this quarter?
See, when you say liquidation at the farmer level consumption, then that may not be happening immediately.
Mm-hmm.
But moving from the primary level to the secondary level, yes.
Which channel would you mean when you say primary to secondary?
Primary is the Dhanuka direct accounts.
Mm-hmm.
And the secondary channel is when they distribute it to sub-retailers.
Okay. And sir, what is the current market situation and how do you see the market shaping up for Kharif?
Okay. Market shaping up for Kharif is from 2 angles. One is how the commodity prices are panning out. And second is how the product prices, agrochemical prices are appearing. So commodity prices continue to show a positive trend in terms of wheat and sugarcane. However, cotton prices have slightly eased out in last few days. But overall, even after easing out, they are at a really good, reasonable level in terms of farmer profitability. So commodity demand appears favorable. In terms of the product prices, so far we have witnessed in last quarter and even now a slowdown in terms of prices cooling down for agrochemical imports. So the domestic prices are also, as of now, soft. Now these two things put together will create a business outlook. In terms of the agriculture opportunity and on ground, I think so that is very favorable, given various supportive schemes from the government and farmers' inclination towards moving towards horticulture crops.
Right. And lastly, sir, on the technical facility front, what would be our plans for production ramp-up post-commencement, and how much revenue should we pencil in for this year and next?
Right. So we are expecting the production to start in third week of July. And in the current financial year, we are expecting a revenue of around rupees 50 crores from the technical plant. And as we move into the next financial year, definitely the production and the revenue would be much higher.
Okay, that's it. Thank you from my side.
Thank you. The next question is from the line of Sudarshan Padmanabhan from JM Financial PMS. Please go ahead.
Thank you for taking my question and congrats on good set of numbers. Sir, my question is just taking forward from the previous participant. This is on, the inventory. I mean, if you are looking at how the channel behavior has been, it has been a little slow primarily, on account of, the prices falling down, etc. Do you think this issue is largely sorted? If you can talk a little bit more about the inventory behavior in the channel, and also how, your inventory is in the channel, in that context.
Yeah. So the inventory in the channel is mixed. Various products of Rabi are still in the pipeline, and we were looking at price going up in April, May. So in anticipation of that, channel has lifted up some inventories in March. That is not yet to happen. However, this is also an expression of solidarity that the channel has demonstrated with us in Dhanuka, and also the way channel foresees demand panning out in May and June. So keeping these two things together, this Q4 business has happened. Now going forward, the consumption of this product at the farmer level will decide how there is movement further.
Sir, is there any specific sub-segment where you are seeing a little bit more challenge? Like, either it is insecticides or fungicides or herbicides, or is it across the board?
I would say the segments are crop specific, that the segments of sugarcane, segments of maize and paddy and soybean and summer pulses, these have shown traction in the month of March in anticipation of consumption in April and May. Also in terms of agrochemical segment, herbicides have shown more traction.
Sure, sir. And sir, with respect to the raw material prices, that high cost raw material prices, with this quarter, sales, have we been able to exhaust a fair amount of high cost inventory, or how much of high cost inventory is still remaining with us, sir?
You see, high cost inventory is become the part of life. Every month the prices are declining. But yes, as on 31st of March, some high cost inventory was in the system, and again the IC price is dropping again in the month of April and May as well. But significant portion of high inventory was liquidated in Q4 itself.
And one final question before I join, sir. If I'm looking at your raw material prices, a lot of the price hikes happened post-COVID in the last 18 months or so. Compared to what it was in pre-COVID, do you think that the prices have rationalized enough, to levels which are a little bit more reasonable, or do you think that there is still significant downside left for the prices to get back to the reasonable level?
Well, the uncertainty prevails. The prices have corrected this month also, and as of now, it seems that the prices would start improving sometime July onwards.
Sure, sir. Thanks a lot. I'll join back.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah. Hi, good afternoon, and congrats on good set of results. I had a question on export opportunities. Okay. In our previous calls, we had stated that we have a team of export manager or a person we have hired. And what we are finding is even for our formulation business, there are opportunities. Okay. Can you elaborate on how are we focusing on that business and what are the challenges in that business, and can it be a substantial business for us in next 2 to 3 years, or it is not the focus area itself, the formulation export business?
Right. So formulation exports is definitely an important business that we are looking at, and in next 2 to 3 years, this business will grow. We established the division last year only, and we are receiving a lot of queries, and we are trying to develop relations with international customers and receiving very good response.
Okay. And what would be our strategy for that business, if we are especially on the formulations business? Exports.
Currently, yeah. So the scope is very high. Currently, we are addressing easy to reach markets as we do not have international registrations. But we are also looking at getting registrations in some of the developed markets, as the business is very attractive in those markets. So we see this as a very good potential in the future, and we will continue to work for the formulation exports also.
And our API plant, which was to come in July, is it on time, and our trials, production, etc., started for that plant, or there is still some way to go for it to start trial production also?
Yes, so our commercial production is expected to start from third week of July. So all the things like trial production and everything will happen in time before that.
Okay. And one thing, just out of curiosity, I had a question. We are investing in drones, agrochemicals, and plant nutrition, etc. Okay. What is our view on seeds business? And have we evaluated that business? And if we have evaluated that business and rejected, and what would be the reason for it? And why not? It is also a business which is very near to what we are doing. But any specific reason whether we like it, we don't like it, or why is it at the back of or lower in priority versus the other businesses which we are trying to develop? Just some of your thoughts. And
so you are asking about the business prospects in seed industry?
No, I am saying that we have been going from agrochemicals to nearby businesses also, okay, or even plant growth means plant nutrition and plant growth enablers and all those type of products, okay, which is some 10-12% of others' revenue, okay. Have you evaluated seeds business, and why not go into that business also? Because we are investing for exports businesses and all those businesses. What is your
right now we are seeing drones, precision agriculture as the frontier technologies of agritech, and we are also looking at nutrition and bioproducts as the current demand of the farmer. And export opportunity was what we looked at as opportunity Dhanuka can explore with our technical plant also coming up. So the focus is here. Seed is a very adjacent business, no wonder. And as of now, we are focused on what we are doing. Tomorrow, seed is not a closed door for us, and at right time we might like to explore that.
Mr. Himanshu, we request that you return to the question queue for follow-up questions. The next question is from the line of Viraj from Simple. Please go ahead.
Yeah, hi. Just a couple of questions. First is, for Q4 and for FY23, can you give some perspective in terms of price and volume mix?
Yeah, you see, in terms of Q4, the value or volume growth was similar. There was hardly any difference. On annual basis, just there is a difference. Volume growth is around 8% as against the overall growth is 15%.
And you said that we have made corrections and we have taken some steps in terms of the channel part. Can you elaborate a little bit more in terms of what how is that network changed for us and what are the initiatives we took there?
Right. So Dhanuka has a pan-India network of 6,500 primary channel partners. This is spread across northeast Assam to South India, Jammu Kashmir and Gujarat, and just to give a flavor of pan-India. And this pan-India network we have worked over last year especially to increase our secondary reach to the primary channel. And in the FY23 we have increased our penetration in the secondary channel. We have increased our reach in the rural hinterland. That is what has changed slightly over last year.
Okay. Second question was largely in terms of the gross margin. Now, if you look at our gross margin, it's at the lowest levels in last 10 years, right? So we earned around 34.5%, and this was the margin structure we used to earn back in 2013. Now, and this is also one of the reasons why our operating margin are also at the lowest level. So, just the question is in two parts. One is if you have to understand the impact of high cost inventory, how much would that be? And other than that, are there any other reasons which are more structural in nature, say the share of non-specialty moving up, or the margins at which we used to earn in some of the larger brands or in the specialty portfolio, has that also moderated than what we used to earn earlier? So if you can just elaborate reasons behind the low contribution margins and how that should kind of, behave over next couple of years for us.
You see, for the year 22-23, this problem is for the industry as a whole. We were not exception to that. So large impact on account of the price erosion and the high inventory cost. And secondly, there was a substantial growth in the VD segment. Normally in the VD segment, competition is very high. So because of which our margins are impacted, and you are right, our margin has badly hit in the year, but it's for all. And we are expecting this year there should be some improvement in the gross margin side in the current financial year.
Okay, and just a related question is, if you look at our operating expenses, say in 23, does this fully reflect the normalized spends which we used to do towards demand creation activities like field staff or A&P spends towards new brands? So does this like a normalized spend for us? Because it's been, quite low for last few quarters, and we've been able to control. The spends have been quite in a very tight band for us. So just trying to understand, does this fully reflect the activities which we used to do pre-COVID, or that is still yet to be reflected?
It is on full scale level this year.
Sorry, sir?
You see, the COVID impact is gone. It is on full scale basis.
Okay, so any other areas where we've been able to derive cost savings, or we were able to have a much more better control on the cost?
Cost control, you will see our employee cost has improved significantly over a period of last 5 years. Our productivity has increased.
Okay, and if I can just squeeze in one last question. In the presentation you talked about, us starting out with production for bifenthrin. Now, if we look at some of these molecules, especially in the synthetic pyrethroid, given the way the prices are right now, even some of the most backward integrated players are not making any money. They're operating below cost, and in certain cases are shutting down facilities. So in that sense, how should we understand the profitability, behaving, say, for next 1 or 2 years?
So yes, currently there is a significant price challenge in pyrethroids, and we find the situation in bifenthrin is favorable, and we are expecting positive gross contribution from bifenthrin, and that is why we have taken a decision to start with this product for the first round.
Mr. Viraj, we request that you return to the question queue for follow-up questions. We shall take the next question. The next question comes from the line of Jainab Ghelani from Swan Investments. Please go ahead.
Hi, sir. Thanks a lot for this opportunity. So what would be the total addressable market size for the patented product that we got?
We have got a patent for our pre-launch product, Motar. We had launched this product way back in 2014 or 2015. The patent was long pending. This product is finding application in paddy, stem borer and leaf folder. And recently we have decided to expand it in sugarcane top shoot borer also. And paddy stem borer, paddy leaf folder and sugarcane top borer is a large market size. Should be close to about 4,000 crores.
Okay.
This product will compete with Rynaxypyr of FMC in that segment.
Okay. And so are we planning any capex post our unit at Dahej or no plan for FY24 and FY25?
Yes, in the current financial year, there will be some capex beyond the current capex. But for the next financial year, we will share the plans in forthcoming calls.
Okay, sir. Thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and congrats on a good Q4. So first question is, there is a lot of talk regarding El Nino impact during this Kharif season. What is our history? I mean, what does our history tell us in terms of whenever El Nino has occurred historically? Has it impacted us severely in terms of volumes and business? Just your perspective on the same. Thank you.
Right. So El Nino is normally associated with lower rainfall in South Asia. Yet there have been years which were El Nino years and still India received relevant and good rainfall. So El Nino has a mixed bag when it comes to rainfalls and uncertainty associated with it. In case of erraticity and abnormality in rainfall, Indian agriculture will get impacted and so will our business be. However, at Dhanuka, we are trying to make ourselves closely associated with irrigated setup of the farmers. So a large section of Indian agriculture is irrigated, and with recent irrigation projects and rural electrification, irrigation opportunities have increased. And we are positioning ourselves in those segments. Also, Dhanuka has introduced various products which are useful for arid application and dry application. So even in case of a low rainfall situation, our product portfolio is designed to mitigate the risk.
Sure, got it. Thank you for that explanation. Second, just some clarifications on the greenfield capex. So I understand the overall capex would be about, say, 260-270 crores, which includes a formulation unit, insecticide, MPP, and for the bifenthrin, and MPP weedicide plant. And earlier we had guided EBITDA margins of 12 to 15%. But given that initially the utilization levels will be lower, probably these kind of margins will be seen in FY25 or so. Are these numbers largely in line and correct?
You see, sir, you have Harsh, I'm replying. You have to take the Dahej project as a startup. It is not possible to have those margins at initial level. The margins are possible once we have some tie-up with Japanese product and do some contract manufacturing, etc. With the initial phase of these synthetic pyrethroids, that kind of margins are not possible. Initially, first year we are envisaging around 20% gross margin, but EBITDA margin will be not positive this year in the first year because the volumes are very less. Once the volumes will start picking up, then the EBITDA margin will come in positive. And initially, as a startup, companies makes loss, and after 2-3 years, they become profitable. So similarly, Dahej project should also be considered as a startup. But for long term, once we get the Japanese product, etc., it will be a much viable project in times to come.
Right, sir. Got it. And this bifenthrin technical, we will be selling it B2B, or we will be also using it captively?
We will be using it captively also, and apart from this, we will supply to other domestic players in India, and we would also like to export also. So it is expected that around 50% will be export and 50% will be domestic.
Right. And just one clarification again on the product launches. So last time we had indicated in FY24 we have 293 molecules and 394 molecules. So the current 2 launches include these which were planned for FY24?
Yes, that is correct.
Okay, and these 2 are both 93 molecules?
94.
Okay, fair enough. Just one last clarification. The Greenfield project capex will be about 260 crores, which will be completely capitalized during FY24. Is that right?
FY24?
Yes.
In FY24, entire 267 will not be capitalized.
Okay, so how much would be capitalized during this year, and how much portion will go in for FY25?
This year would be around 200 CR.
Okay, fair enough. Thank you so much and best of luck, sir.
Thank you. The next question is from the line of Chintan Modi from Haitong Securities India Private Limited. Please go ahead, sir.
Yeah, thank you, sir. Sir, can you tell how much was the volume growth for the fourth quarter and for the full year?
You see, volume growth in the quarter 4 was 16.5%, and full year it was 8%.
8%?
Yeah.
Okay. And considering that next year the demand on ground seems to be decent, should we expect this 8% kind of volume growth to continue, or you expect a higher volume growth in the next year?
Of course, we are expecting a higher volume growth in this year.
Okay. That would be somewhere around, can we expect like in the range of 10 to 15% odd, approximately?
Yeah, we are expecting in double digits, but the rest depends on monsoon.
Okay, sure. And
because of reducing pricing trend, the volume growth will be higher this year in comparison to the value growth.
Sure. And looking at the gross margins, can we directionally expect some improvement to happen in FY24 compared to FY23?
Yes, for sure. We are very much confident that there should be some improvement this year for sure.
Sure. And sir, just one observation. If you look at last 5 years of gross margin trend, it has been gradually, deteriorating. Last year, I understand it was because of the lot of raw materials, the volatility that we have seen in the raw material prices. But directionally, it has been coming down. So some highlight if you can share on that.
This is not true. In the year 2021, the gross margin was on the peak.
Sir, your COGS, what I can see currently in FY21 is about 62.2%, and which has increased to 65.6% in FY23.
Gross margin in FY 2021 was highest, which was 37.78%, as against this year 34.39%.
So that deterioration has happened, that is what I'm saying. And also a little bit on a longer trend also, if you look at, there has been some deterioration.
Yeah, over a period of time, the segment, I'm saying the share of herbicide has increased, and in the case of herbicide, the competition is fierce. So that way, little impact is there, and this year is really was very, very difficult for the industry as a whole.
Sure. Okay, sir, that's it from my end. Thanks a lot, sir.
Thank you. The next question is from the line of Prashant Biyani from Elara Securities. Please go ahead.
Yeah, Rahul, you mentioned in the initial question that channel is anticipating early demand. So this will be for which crop and in which segment?
I shared that maize, sugarcane, paddy, and summer pulses.
Okay, and but sir, otherwise is it that in 4Q placement was a bit higher than normal, or some of the products which we might have been placing in Q1, we have done some early placement because of channel wanting that?
Some placement has been higher, yes.
Okay, and a different question. Most of the fertilizer companies are now venturing into agrochemical space, even now planning to set up the plant. So why can't we do the same? Have we thought of either developing a nano urea or a nano DAP by ourselves, or entering into some sort of a tie-up with IFCO, or even set up a SSP manufacturing facility for which phosphate source is available and we also have the money power to invest?
I could not get your question, Mr. Prashant. The question is about fertilizer companies entering agrochemical space, or the question is about Dhanuka setting up fertilizer?
We setting up fertilizer.
Right. So as of now, we are looking at value-added nutrition management, what the Prime Minister has been continuously been talking about. One is soil health and second is integrated nutrition management. So that is where we are kind of focusing ourselves on. The bulk fertilizer, which is a volume game, is as of now left with the fertilizer companies. As per the nanotechnology, a lot of research is yet to be done on the nanotechnology and how it emerges and its application. And its application, utility and benefits are yet to be proven. Dhanuka is watching this space closely, doing our own R&D at our newly established R&D center in Palwal. And we are evaluating the value added to the farmer before we can come in actively and commercially.
Okay, that's it from my side.
Thank you. The next question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Good evening, sir. My first question is basically we have launched 3 biological products. Any long-term target, what would be the revenue contribution from biological products in next 2 to 3 years to the overall revenue?
Well, I believe in about 3 years' time, this could be contributing up to 5% of our total revenue.
Okay, 5%. And sir, in terms of guidance, you have mentioned about 50 to 100 basis point improvement on current year. So will this be driven by cost control, doing away with high margin, high cost inventory? So it will be more driven by that or by the product mix?
It will be driven by largely the improvement in the gross margin.
Okay. And sir, last question on the mix. Basically, we have launched 2 herbicides, and mostly our product portfolio is like 46% insecticide. So, going forward, will herbicide share increase compared to insecticide?
Well, I believe insecticide segment is going to become richer in Dhanuka over next 3 years. So our share in insecticide is going to go up. As an insecticide share in our portfolio is going to go up.
Sure. And so lastly, within insecticide, what would be the spread between pyrethroids and organophosphates?
The spread between pyrethroids and organophosphates, as in these are not the only 2 segments. There are at least 7 different segments of insecticides that we operate on. Pyrethroids and organophosphates are one small segment of the total portfolio of close to 50 insecticides that we handle.
Okay, so which segment would be like I assume the organophosphate would be the major part within insecticide for a portfolio?
What exactly is your question? Can you kind of...
Yeah, so just wanted to know what type of within insecticides, which would be the leading segment, sub-segment within insecticides portfolio.
Right. Yes. So actually now, as the chemistry has improved over the last 2 decades, there is not one segment which is dominating. Well, almost 30 years back, organophosphates were dominating. 20 years back, before BT cotton came in, synthetic pyrethroids were dominating. But after BT cotton, synthetic pyrethroids and organophosphates have become a segment in the portfolio, very important range. Even now, out of our 50 products, close to 11 or 12 brands will be synthetic pyrethroids and organophosphates. But 30 other products come from different segments. Some of them are neonicotinoids, some of them are GABA inhibitors, some other are miticides. So the spread is really wide. Some of the largest insecticides that we are handling, for example, Keldan and Rynaxypyr, which is cover liquid and cover granule. These are completely different chemistries and very powerful chemistries in their own capability. So synthetic pyrethroids and organophosphates do not dominate Dhanuka's portfolio. Imamectin, Largo, which is a secondary metabolite of a bioproduct, extremely safe. So we have a wide, diversified across crops and different pests and diseases, different pest and insect portfolio, which we are going to only make powerful with some of our launches. Last year we launched Decide, a Japanese premix product, and next year also we are going to launch a Japanese premix product in horticulture segment. So Dhanuka is going to strengthen the insecticide portfolio significantly in next couple of years.
Mr. Yogesh, we request that you return to the question queue for follow-up questions. We shall take the next question. The next question comes from the line of Viraj from Simple. Please go ahead.
Yeah, I just had one query. The guidance which you gave in the margins 50 to 100 basis points, that is after considering the impact we may have because of the age facility commissioning, right?
Can you repeat the question? Your voice was not audible.
Improvement of 50 to 100 basis points which we gave for FY24, that is including the impact we may see because of the age facility commissioning.
No, we are telling the entire thing. We see standalone without Dahej so far now. So Dahej contribution would be very insignificant in this year. It is irrespective of the age.
It is irrespective of the age.
Yeah.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the follow-up. Just one question in terms of any further dialogues with Japanese customers. So we've been talking with them regarding any long-term contract or for some products. So any further development on the same? Thank you.
Yes, so there is development and we are in continuous discussion. I think as we have informed earlier, these are long-term projects, so we are not expecting anything to close very quickly. It may take some time, but we are very confident of getting Japanese projects in the future because of our long-term relationships with the Japanese partners.
Sure, that's it. Thank you so much.
Thank you. The next question is from the line of Rohan Gupta from Nuvama. Please go ahead.
Hi sir, good evening and congratulations on good set of numbers in the current scenario. Rahulji, just wanted to have some clarification in terms of system and channel inventory, not just only for Dhanuka but for across the industry. In a current scenario, the industry is preparing for the Kharif crop, but we have seen that the season and El Nino has been impacting the channel, and there has been some resistance also from the channel in terms of stocking the inventory. Also, on the contrary, we are seeing that the raw material prices are falling, which may lead to fall in end product pricing as well. So, in this kind of scenario, how you see that the channel inventory is right now? Is it less, more? Yes, that is the first clarification.
Yeah, so channel inventory would be relatively higher.
Okay, and this is across and when the system or the channel is sitting on a high cost inventory, you are expecting the prices to fall. So will it lead to lower acceptance once the prices fall, raw material prices fall, say suppose in July, when you put the new material in the market at a lower prices, will there be lower acceptance from the dealer or channel at the new prices because they will be sitting on a high cost inventory, or how the system will pan out?
Yeah, so there is that risk certainly, that the lifting is mitigated for a while before the liquidation happens.
And you see, in the month of March, the many companies are having different scheme on account of the incremental discount, right? So after considering the discount, the impact should not be much.
Hello?
Yeah.
Okay. Sir, we have also seen that there is a very significant practice now which has been continuously increasing year by year, is offering very heavy cash discounts of CG schemes or attractive schemes at the start of the season itself in the placement season. So generally March, April, which is considered to be a placement season, we used to see earlier CDs or company offering CDs of close to 6 to 8%. We have seen some of the new players or even the existing players in the system have offered CDs or incentive schemes as aggressive as even 12% to even going up to 18% also. Do you see that this new trend is emerging, which is definitely making the large dealers and distributors to grab the material at the starting of the season and to benefit from the schemes? And when we are more closer to the consumption, and that basically drives the leads to volatility or unpredictability for the players like you, because we don't know how much large dealers, distributors will be sitting on a low or previous inventories that is probably making your business more unpredictable and more volatile?
Well, business has not become any lesser or more unpredictable or volatile. Business has always been like that. And agriculture, agrochemical has always been as unpredictable and as volatile. The need to feed 1.5 billion population in India and now 8 billion population across the globe, opportunity to export wheat and various other commodities has only put India relatively on the forefront of balancing the global food demand and agrochemical industry in a better position to be able to service that. Nothing about uncertainty or unpredictability has changed here. The weather and the supply chain remain as unpredictable as ever. Talking about the cash discounts, these are schemes camouflaged under different titles. So, like earlier we said that the balancing of the schemes allows the channel to mitigate the risk of reducing prices. So these are the schemes which are available to the channel offered by companies by different names.
Okay, sir. Thank you.
Thank you. I would now like to hand the conference over to Mr. M.K. Dhanuka for closing comments.
Good evening, friends. To summarize at last, Dhanuka continues to demonstrate our ability to overcome challenges and emerge stronger despite uncertain business environment. Dhanuka will aggressively roll out new formulations in the upcoming quarter to ensure that it reaches to the consumer. I reassure our shareholders and all the stakeholders that we are committed to the task of transforming the landscape of agriculture in India and will play an integral role in rewriting the future of a better and new India. Wishing you all good health and safety. Thank you very much.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.